and we both know it. Every deal has hiccups. Every deal is gonna, some are gonna go great, but the majority of them are gonna have unexpected things. And if you're not communicating with your lender, and we have to discover something on our own that's negative, that is not going to make us want to work with you on that loan or any future loans.
I would like to take a 10-minute break and then 3, 2, 1. How do you have the ability to analyze stocks?
Welcome to the Generations of Wealth podcast. I'm your host, Derek Dombeck, and today's show, a lot of fun because we're talking to a hard money lender, and we get to share notes of the good, the bad, the ugly from when I was a hard money lender. Michael is just a wealth of knowledge, and he's been in this business for 2.5 decades. So I always love those shows. Before I bring him on, I try to give you a little nugget every time, every show, every intro. And this one is all about raising money and utilizing your lender properly. And we're going to talk about that in the show. But if you're lending money or you're raising money, just please take care of your lenders. They are your lifeblood. And, if you need help with any of that, we raise our own private money. We help people if they're looking to raise money. So reach out to me, derekdombeck.com or thegenerationsofwealth.com, and let me be a resource for you. So with that, let's bring on our guest. And here he is, all the way from sunny Arizona, Mr. Michael Liuculano. How are you doing today, sir?
Very well, and yourself? Thanks for having me on.
Absolutely. Well, I appreciate you coming on. And just because I don't really love not being in full disclosure, you and I started recording this episode about 10 minutes ago and had some tech issues. So we're starting over. And since I don't really edit my shows and I just like raw shows anyways, those of you listening to this, you just never know what's going to happen in podcasting. So I do know more about Michael now than I did before we started recording. But Michael, why don't you tell the audience a second time about yourself?
Yeah. So my name is Michael Liuculano. I'm from Scottsdale, Arizona. I've been here almost 31 years. I have two gorgeous daughters, 5 and 2. I have a girlfriend named Ashley, a dog named Vinny, and I am in the hard money, private money lending space where I've been in lending since February of 2002.
Awesome. And you didn't know when we started recording the first time, but now you do know I was also a hard money lender for 10 years.
I do now.
You do now. So we're going to skip through a couple things that we already discussed, but I'll preface it. We were discussing how we as hard money lenders protect our borrowers. And the reason that's so important is because we really are looking at how people can fail in the event that things don't go right. So what do you see when you underwrite your loans, and what drives you crazy about borrowers that come to you for funding?
Over leveraged and undercapitalized, either both of those or one of those. It seems to be the more often than not. I think people are hoping they're gambling. And we like to see investors. We like to see sound deals. We like to see thought out plans, thought out exit strategies, thought out downside, risk if the deal goes south. But it seems like there are a lot of people who like real estate is a contact sport, meaning it requires money. It doesn't have to be yours. It could be someone else's, but like we're a lender. We're not a partner. You need to have some money. Like people looking for 100% financing, like we're going to be funding like a partner, but getting paid like a lender. It's not how it works. I think there should be some like finance 101 classes relevant to this sector for people to have some minimum level of common sense of why and how a lender would fund a deal. Deal structuring is a big part of how and why a deal gets done.
Yeah, for sure. And for myself, when we were lending, we were also running and still do run a full-time acquisition company. And that's how we could protect the borrowers. Because if somebody came to us with a scope of work and they said, well, we're going to put a brand new kitchen in for $3,000, I'm going to call bullshit.
Right.
And we're going to talk about it. But what's your experience level? Because you started a long time ago. What got you to the point of being a lender and being confident?
Sure. So, like I said, I started in lending in February of 2002. And what kind of drove me into that space was like a year or two out of college or out of high school, I should say, a little bit into college. I had a lot of friends that were in this space and they were doing well. So it got my wheels turning. Also, being in Scottsdale, Arizona, this town, even the state as a whole, has always kind of been front and center in the real estate world. It's been a growing town, very business friendly, a lot of growth. People love the weather outside of the summertime. So there's always been movement here, and there still is. So there was always a need for financing and flip deals and this and that. So I got into the business. My strength of life since I was 4 years old was math. So being in lending was always kind of a gift of mine, or being in math was always kind of a gift of mine. So it was natural progression. I got obsessed with the terms and the guidelines and what's possible. And, how can you borrow here and arbitrage over there? Just all I nerd out on this stuff, right? And after being in lending and understanding the financing world was natural progression to be doing real estate deals. We started doing flips and we did rentals and all that stuff. And so then I had the education formally, but also the experience then. In 2009, and so in 2002, I started in regular lending, did that for 7 years. And then in 2009, went into private money, hard money, where I've been doing that ever since. And so now our focal point is flip financing, ground up construction, DSCR loans, a lot of stuff with investors, but also harder deals to do, bridge loans, short-term lending, things like that.
So you said a couple things that triggered me from my early years. When I got into real estate, it was all traditional lenders for and then the real estate market crashed, and I realized that I had no control over my business because the banks did, and it wasn't
Right.
good. It wasn't good for a long time, right? So when we got into lending ourselves, it was always about protecting the lender. Whether I'm borrowing money from somebody or I'm lending money to somebody, in either case, you should always protect your lender. And I see people at my local RIA that are just borrowing money back and forth to each other, and they don't properly paper things with notes and mortgages and proper insurance and title insurance, lender's title insurance, all of those things. And they just don't honestly get educated on what they should do as a borrower or a lender. But you did say the lender is not necessarily your partner, but they
They're
are
not
very
your partner. They're your lending partner, but they're not your business partner.
correct. They're an integral part to your business, right?
That's right.
So
But I think people just think it's like I don't know. I don't think they think about that. Like, why would we fund 98, 100% of your deal? We're putting all the money up. We're going to get paid an interest rate. You're going to have no skin in the game, nothing to lose, but then you're also going to get all the profit if it goes well.
right. Well, let's talk about your criteria. Because I'm sure that we all did things different or do things different in the lending space based off of our risk tolerances. First of all, are you guys holding all of your notes in-house, or are you selling notes? What do you do with yours?
So we have multiple channels and multiple sort of dispositions. So we have our own fund. We also have outside investors that fund directly, like direct trust deeds. We have family office, family money, all sorts of outs. So most of the deals we fund, the people are funding for income. They want to keep it. We don't really sell, regardless of any one of those channels. pretty much everybody's going to hold that note. They want the income.
Okay. And then, so are you essentially white labeling everything?
No, I mean the fund is ours. The direct stuff, I mean, it's funded through our brokerage. We also have our own mortgage brokerage as well. So, I mean, I guess you could say that, but I
Well,
guess you depends on what you consider white label.
yeah, so the reason I guess I use that term is there are hard money lenders out there that they're just they do the transaction and it's table funded by another person or organization or family office that doesn't really want to be on public record. And we did this with our fund and with our direct lenders. Our lending company was the one that was recorded, but there was
Yep.
an assignment of collateral that was
At closing.
at closing.
Yeah.
So
Yeah, we do
if
that.
that, yeah, if that note ever goes bad, we are the ones that are going to go and foreclose and take care of the challenges. But
We do that on our direct investor deals. When we have it as our own fund, we're on record. But if it's
yeah,
like Tom Smith, one of our private guys, that deal will be our brokerage will be the owner
mhm.
and it will assign at closing.
Which is important because a lot of our investors, they don't want to deal with it if they had to foreclose and go bad. And there's internal paperwork between us and them, servicing agreements and things of that nature. But the reason I bring this up is a lot of people listening to the show, they don't know how that all works, right? They just come to you and they're like, "Hey, we need money," right? But there's a lot of stuff that goes on behind the scenes that we do to protect the borrower as well as protect the investor that's putting up the funds.
Right. Yeah. I mean, look, I always say, regardless of borrowers or not, my allegiance is to my investors.
Hmm.
Like if it's borrower or investor, it's check writer.
Oh, that's your lifeblood,
Right.
100%. Um, what are you guys doing for volume on a monthly basis?
We're picking up. We're probably last year we did 122 million. This year, my guess, if we keep going like we're going now, we might hit 160,
Okay.
somewhere in that range.
What's your average loan amount?
We're over $1 million.
Okay. So you're doing what? 160 loans a year average?
I mean, not so far this year, not last year, but the
Yeah.
goal is to hopefully get somewhere in that range.
So how do you mitigate the risk of market cycles? You're in a kind of a volatile up and down, peaks and valleys type of market compared to where I am in the Midwest. As an underwriter, as a lender, what's your crystal ball look like when you're giving out a loan?
I try not to think of speculation. I try to go off fundamentals.
Hmm.
One of the things we do more often than not is we typically will do 1 year balloon on almost 85% of our loans are 1 year balloon. And I think that's huge and big because a lot more can go wrong in 2 years or 5 years or whatever it is. So when we put that 1 year and then in a year, we can come back and say, okay, you know what, you need an extension or for whatever reason, the loan isn't going to pay, but you've been a good payer. The deal continues to support from a loan to value protection standpoint, we'll extend it. But one of the major things we do is the good bulk of our loans are 1 year balloon. So that's that. We're also looking at the deal, right? Like, hey, if you're paying 700 grand for a property, but the upside, let's say this one happens to be a flip deal, you're going to put 100 grand in and then it's worth 950 or whatever. There's also upside. And clearly we're not funding 700 grand. We're going to fund a percentage of it
Hmm.
because you're also going to have money down and skin in the game. So now we're funding on a discounted purchase, but also below that because there's money being put down. So I think the number one thing, especially for purchase deal, skin in the game. There's nothing trumps skin in the game. I have done deals where people are absolutely stealing properties where we've done little to no skin in the game. We did one not that long ago. Guy was buying his brother's house or something. It was a $600,000 house. He was buying it for 200 grand. I mean, it was stupid. We funded
Hmm.
the whole thing,
Right.
right? But that's way more the exception than the norm. Skin in the game is the most telltale sign of default versus not. I wouldn't even say opinion, I'd say in my factual opinion.
In your experience.
Yeah.
Yeah. Well, and we did a lot of loans that were very little or even no money out of the borrower's pocket, but that changed as the market changed, and it was still at a maximum of 65% loan to value. Once people weren't able to actually buy those properties and renovate them, so they had to be able to buy it and renovate it within 65% of the ARV. And of course, we control the escrow, the construction escrow. But all those things changed as people weren't able to get good enough deals. And then, yes, they have to bring funds to the table or cross collateralize or other creative things, right?
Yeah.
But when you mentioned extensions, it made me think of this too. When somebody needs an extension or they're getting to the tail end of their loan in the balloon period, what's the number one thing that will make you want to give them an extension? The first thing that pops in your head.
What's the number one thing that makes me want to give them an extension?
Yes.
That their payment history and their performance has been on point.
Perfect. And for me, it's communication, right? If they're not communicating with me and they're just straight up ghosting us, it's not happening, you know? And I see that so much, especially as you said, and we both know it. Every deal has hiccups. Every deal is gonna, some are gonna go great, but the majority of them are gonna have unexpected things. And if you're not communicating with your lender, and we have to discover something on our own that's negative, that is not going to make us want to work with you on that loan or any future loans.
Yeah, I don't disagree. It's amazing how many people think we're not going to see what happens. Like, one of my biggest red flags is when someone has a hard money lender already, like on a loan, and then they'll call me and they'll say, "Hey, I need to do a refinance of this loan." The first question I ask is, why isn't your guy extending? Right? Like, because if he's already doing a hard money loan, that's what that guy does. So why isn't he extending? Right? Yeah, there's the odd scenario, the guy needs the money, whatever. There's a reason he's not extending. And then you ask him, okay, why is he not extending? Oh, he needs the money back, or they give you some bullshit answer. Hey, the first question I ask, are you on time? Have you ever missed payments? No, we're on time. Great. Cool. Let me get the servicing history. And then I see there was 6 missed payments, or that's weird. The original loan that you borrowed was 200 grand, but somehow the balance is 219. How is that possible? And we're going to find out. Like, underwriters are literally detectives. It's basic numbers and math, right? So I just think it's funny when people lie or try to avoid telling us the truth that is inevitably going to happen. You're just wasting your time as much as mine.
Well, and when they come to us, and this is for all of you listening, like, don't do these things, right? But when they come to us and they're like, okay, here's my scope of work. It's written out on a piece of paper with a screenshot, and it's so off versus what they think the ARV is because they went and shopped for comps that would support their ARV. So we did a fair amount of lending in Milwaukee, which is our biggest market in the state. And, Milwaukee, if you go 2 or 3 blocks, you're in a completely different neighborhood. And I would get people submitting, their CMA from a realtor with comps from 2 miles away. Like, that you went through three war zones and 2 different gang areas to find the number that supported what you're asking me to fund. Not happening.
Right.
And it shouldn't happen because you're never going to be able to sell that house for what you think you are. And I'm protecting you from yourself. Right. So don't do that, guys. Like, just don't do that. Take care of your lenders. They'll take care of you. But don't set yourself up for failure by fudging numbers, or even if they didn't know they were fudging numbers, those are as you mentioned earlier, the uneducated borrowers, right?
Yeah. And I get it. We all have to learn, and we all have to kind of, go through what we have to go through to learn. I get it. But, I think listen to this podcasts and other ones understood basic fundamentals and principles of how to comp a deal or, buy a bigger discount. And I get it. It's competitive out there, but you know, you should see what happens when you lose money and how bad that sucks.
Well, since we're talking about losing money, we might as well talk about some horror stories. What's the biggest horror story you had as a lender, and also the biggest horror story you had when you were doing your own flipping?
Um, I will tell you, I don't have horror stories from my flipping. I was very fortunate to have the background I did, and strangely and fortunately, a lot of the deals I got were from like being in the business. So there were a lot of guys that we lended to that were like, "Hey, I don't want it anymore," and we were in the right place at the right time where we were able to buy some kind of no-brainer or little brainer deals. So I don't have a lot of horror stories on flips, personally. As far as like we had a deal one time, it was a deal in Tucson, Arizona, and it was a guy we lent money to. And interestingly enough, this guy decided in the interim of the project to commit suicide,
Mm.
which we didn't know because we were trying to reach this guy for months and we couldn't get a hold of him. And my check writer actually ended up losing money in a way that unfortunately wasn't able to be prevented because of the way this was set up. And she ended up losing a significant amount of money because she was sitting on the property, had to go through all the process because this guy was deceased. So that was a pretty big, that was maybe 2016, 2015. That was pretty bad. We had another deal. I won't say any names ever. This one was chilling. We had a guy who I actually did 5 flip deals for, who ended up doing a sixth loan. And strangely, had nothing to do with the property. We had another guy who ended up being charged and then subsequently convicted of murder, who prior to that, I had no clue was the nicest guy. My family and him met him and had dinner with him and his family, and he ended up getting convicted of murder in the interim of doing a flip deal. So you can imagine where that went. So
Mm.
nothing to this point that was actually related to the deal. So I don't know if that's good or bad, but I guess they were challenges nonetheless.
Well,
There's
we
more
had
other
one.
stories, but
Yeah, we had one. The borrower bought the house from the seller who also was listed. The property was listed on the MLS, and everything checked out. The deal was good. We underwrote the deal, funded it, and 2 weeks later, he gets this love letter from the city, and they said, "You are, we redid the 100-year floodplains. You need to pick this house up 4 feet. You literally need to
oh wow.
pick it up and raise the foundation up." And this was all in motion before he bought it, but they never disclosed. So the brokerage didn't disclose, the seller didn't disclose, and now our loan to value that looked really great in the beginning, not so much, because nothing could be done to the house until this was settled. And of course, he turned around and went and started a lawsuit against the broker and the seller and everything else. But this went on for a couple of years, and we're sitting there stuck. Like, we could foreclose, take the property back, but now we have to deal with all of that stuff with the city, and certainly we lost money on it, and he lost money on it, but he literally did nothing wrong, and it affected all of us. The other one, which was not fun at all, we hired an inspector, that worked for us. He would go and do the inspections before we would release draw money on the construction draws. He was a friend of the borrower, so they were only rehabbing one room of this house, and they would send in, reports and pictures and everything. Yep, paint's done, flooring's done, release this money. We released like $50,000. Come to find out, after we had to take the property back, the rest of it was bare studs and in a just disarray. And he had nothing else to go after. So we could probably swap some more horror stories, but
Oh yeah.
it's
Yeah, I mean, those are
not all
just two that
roses.
come to mind, but yeah.
So um, in the Arizona market, what are you seeing right now?
I mean, there's a lot of listings. It's like you said, peaks and valleys. There are definitely larger gaps. The luxury market's on fire. There's a town out here called Paradise Valley. I swear to God, they can't price them high enough. Um, there's a lot of California money coming out. We've got a pretty strong second home market, I would say, like in the valley. A lot of people like to be here in the, you know, November to April, maybe May at the latest. Um, it's a great spot. I mean, we're pretty pretty business friendly, decently low state tax. Property tax is pretty favorable. Um, People want to be here, man. They do. The only thing that would make this place better is if we had an ocean. That's it. Um,
Can't you build one, Michael?
What's that?
Can't you just build an ocean real quick?
I mean, they're trying to build these little like uh, like lake areas and surf parks and things like that. But no, I can't. That's why I go to Florida and California all the time.
Absolutely.
Yeah. But look, it's nice out here. Like I said, I've been here 31 years. I love it. I don't like the summers, but it's very functional. It's very nice. It's very clean. It's very well managed. But as far as the real estate market, there's a lot of development. There's lots of new restaurants and uh, big companies and stuff moving here. So there's definitely a draw.
What is it like for the median income people that, need to service all these businesses? What's the median price point for a 3-bedroom, 2-bath, 1,500 square foot ranch that's not high end?
I think we're about 400K, maybe
Okay.
420, 430. I actually don't know, but I'm pretty sure it's around that price point statewide.
Okay. And that's always interesting for me when I talk to people from all over the country. It's all perspective, right? Like California, East Coast, that ranch house is $1.5 million, $2 million. In my market, that ranch house is 250, maybe 300, depending. And that's why a lot of people do come to the Midwest as well. They
Yeah,
do a 1031 exchange and they can come buy 5 houses for what they sold their place in California for.
and their cash flow is way better.
Yeah, yeah, for sure, for sure. Well, this is my regular audience knows what's coming. This is the hardest question for you. What is one question I should have asked you that I did not, and it can be about anything?
One question that you could have asked me. Oh, wow. I think that might be the question, the one you just asked. One question. That would be, geez, nobody's asked me that. Oh my God. I'm literally off guard right now.
Perfect.
One question that you should have asked that you should ask. Related to business, I would say, has anyone not been able to answer this?
Nope, you're the first one I've stumped, and I'm not editing out anything, so the dead air is going to be on the show for everybody's enjoyment, including mine.
Wow. You know what? I would say, what's my plans for the future with this business? And I would say, because I'm constantly thinking forward, I'm constantly building forward. I call it making future money. Like we're always making future money. If you're not, you're going to cut off at some point. I'm really big into tech and systems and delegation. So the answer to your question is the question of what's my plans for the future related to the business. And I would tell you that answer is constantly building, constantly grinding. I think we're just now really hitting our stride. I've been through 3 different CRMs. I've been through a couple of different digital marketing companies, a couple of different social media managers, and I feel like I have the all-star team now. You know, I would say since '09 is when we got real big in the internet. So what is that, 17 years later? Um, you know, just like any entrepreneur, I go up and down in my excitement. One day is the best day. One day I hate my business, but I feel like I've got the all-star team around me now, and it's exciting. My faith and confidence in this business is exciting. Again, like at the all-time high. We've tinkered with so many marketing things for digital marketings, and I swear to God, through being in this business, you know, so much comes from digital marketing. I sort of got, if I wasn't my business, I would be in internet marketing. It's fascinating what you can do with dialing in your systems, your teams, and your numbers. You know what I mean? So, um, my plans are to keep building, keep raising money. Probably going to get into some development here as well. Through being in this space, I built an incredible team and set of contacts of guys and girls that are doing it. And so I'm probably going to start getting into a couple developments. So that, you know, it's exciting.
Mm-hmm. Well, people kind of look at me sideways when I tell them I bought my first couple rental properties out of a newspaper ad. And to go from when you and I started newspaper ads to now, you know, I have an AI bot that answers my phones and, you know, all this. It's kind of crazy to think about what's happened in little over a couple decades.
It's cool, man. I mean, look, you need to stay with it. And if you, it's like AI. A lot of people are afraid of AI. I think AI is awesome. It's going to make those that are good great, and it's going to make those that are great better. And it's going to make those that aren't involved or are afraid of it possibly the dinosaurs.
Yeah, and that's in any industry, right?
Right.
Like I'm not tech savvy at all, but I got people that are. And
Yeah.
you find what you're good at and you try to focus as much time as you can in your business on what you're good at and bring in people that can handle the rest.
Yeah. No debate there.
Yeah. Well, I really appreciate you coming on the show, Michael.
Yeah.
And you know, it's been a pleasure. We got to start twice, but either way, your experience, your knowledge is awesome. It's always fun to talk to people that have been in this industry for as long as we have. And for those of you that haven't been in this industry through a couple different market cycles, you just got to stay aware. You know, it is part of how we make even more money is don't get stuck in where you were. Try to look towards the future, as you just so eloquently said.
Future money. Always make future money.
Yep. Fantastic. Well, again, thanks so much, Michael.
Thank you. I appreciate it.
And for the rest of you listening, you know, I tell you after every show, if you know somebody that should hear this show, absolutely get them connected with it. Go out there on social media, share this, like it, love it. And until the next one, go and live your vision, love your life. See ya.